So many of us have app fatigue. So many clients, so many apps, and so many different payments, charges, receipts, subscriptions, discounts, bundles. It's almost impossible to keep track of. What if you could have just one subscription for 50 different integrated business apps? You can. It's called Zoho One. Stay tuned to hear more from our sponsor, Zoho, later in the episode.
Broadly, in the United States right now, across all industries, there are 2 jobs for every 1 worker. 2 jobs available for every 1 worker. So I find this idea that a recession is going to correct the labor imbalance in accounting to be completely absurd. Because if anything, it's worse than that. There's probably more than 2 jobs for every accountant right now. So even if a recession causes a drop in employment of, 20%, which would be a lot, there's still going to be more jobs than there are people.
Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And we are joined today by Sarah Work. Sarah, welcome to the show.
Thank you. Thanks for having me.
So, Sarah, where are you based?
I am outside of Charlotte in York, South Carolina.
And you are a CPA.
Yep.
And you're also running for office.
Yes. South Carolina State Treasurer.
Carolina State Treasurer.
Historically, we've always said we
mm-hmm.
need more CPAs in politics.
Right.
A lot more. And so we saw the opportunity of come on and talk to our listeners. Not all our listeners can vote for you.
Right.
They should be able to, they could donate. They could help you out.
They could donate, and I love donations. Please feel free to send me donations. We're trying to get some last minute advertising on newspapers, on their banners, on their online advertising, and also Facebook and all the places where people go for their media content. But the reason I kind of asked you guys if I could come on is because you had mentioned that more accountants should be involved in politics, and I think if everyone asks me what would you consider success in running for state treasurer if you don't actually get into office, and I was like, if I can encourage one other person to run for office, even though it's uncomfortable and it's not, putting yourself out there is not the easiest thing in the world, but if I can encourage one more person to run for office and be a citizen leader instead of part of the political class, I would consider that a success. So
awesome.
Hopefully we can encourage some folks today that even if you can't vote for me in South Carolina, to be the choice that they want to see on their ballots. So.
Well, thanks for joining us. I would love to talk to you more about your platform, what you want to do, and how you want to change things.
Yeah.
But first, we got to talk, David, about where we were at this past week. We were at SuiteWorld in Las Vegas.
We went around for 3-4 days in a row, 3 days. It feels like 4 days in Vegas, but it's probably just 2.5 days. It was 2 nights, basically, but it felt like 4.
Yeah. 2 nights is my preferred amount of time in Vegas. After that, things start to get a little strange, right? The world doesn't make sense anymore. But we were there for 3 nights. This is the conference put on by Oracle NetSuite. NetSuite is part of Oracle. They do an annual conference. For our listeners who are more familiar with Xero or with QuickBooks, this is their version of QuickBooks Connect or XeroCon. And what was amazing to me about this conference, having gone now for 4 years, this is our second year as the podcast, is just how much it's becoming more like a QuickBooks Connect or a XeroCon. That was my impression. David, did you feel the same way? The energy and the innovation. 4 years ago, it was way more people in business suits and kind of just buttoned up. But now it's a lot more, I don't know, it just felt more energized. It felt more casual.
So I didn't go 4 years ago, but here they had this huge long stage and it's 6,000 seats for their keynote. And motorcycles were driving across the stage. And you're telling me 4 years ago, there was no way that would have happened.
Evan Goldberg, the founder of NetSuite, has always had sort of a mischievous personality, and he likes puns, he likes jokes, And so there's always was that, but not this level of the size of it, the energy of it. And we got to speak to quite a few NetSuite customers. I think we did 5 or 6 interviews while we were there. And
I can run through, just a little preview.
Yeah, give us a preview of what we're going to hear.
Accountants like cookies. So we interviewed the VP of Finance, Michael Card at Crumble, so Crumble Cookies. Accountants Like Popsicles. We introduced the interviewed the CFO, Connor Ray of Johnny Pops. We introduced a CPA who had a really interesting career because she started out, believe it or not, her first job was at Anderson. Right?
Arthur Anderson.
And she went from, in a 6-month period, to Arthur Anderson completely folding. Right out of college. That's her first job in an accounting firm because of the Enron thing. And she works for a Farm Chem, and they make drug patches for your arms for drug testing. So it was a great, I love talking to the customers.
Yeah, and also the director of finance at Grid, which is a sustainable cryptocurrency mining company, which, I like sustainable and cryptocurrency aren't two things that I am super familiar with, but as being connected. But yeah, it was great. They're all on NetSuite. They're all using it in different ways and different scale. Like FarmChem is 9 people. And I think the largest one is probably Crumble, the cookie company, where they've got 200 franchisees now. But they're all super high growth. They all are super ambitious. And we talked to them about what they are using in NetSuite, why they switch from QuickBooks to NetSuite. And that's in every episode. So if you are a QuickBooks Zero person and you don't know mid-market ERP or software like NetSuite, listen to those episodes and you'll find out when you need to switch, when to advise customers. Yeah, it was very enlightening. The big takeaway for me was that when QuickBooks started to break was when you needed to connect your operational and your financial processes in one place. And when things got really complicated, when it came to invoicing, or when it came to food manufacturing and needing to track lot numbers across all of these different batches you're making. And that kind of stuff you can do in an ERP system, which you can't do.
And what's interesting about that conference, because think about our audience and who we talk to all the time. We talk to other accountants and bookkeepers that usually have clients, but we never talk to anybody's clients. So this is this, and then maybe a little bit at Sage Transform in 2 weeks when we go there. We actually talk to users of the software in a way we don't get to do that with all the other accountants. And so maybe we're just I'm not saying we're bored talking to accountants and bookkeepers, but it's really refreshing, exciting to talk to an accountant or bookkeeper that's part of a building high growth company and how they got there and why they chose certain platforms and made decisions on their accounting and bookkeeping and where they're at in their journeys. It's really exciting.
And the head of finance, the CFO at Crumble, what was his name again?
Michael Card, right?
Mike, yes. So Mike, he's got a great story because he actually he owned a small accounting firm and Crumble was a client. And then as Crumble grew, they asked him for more and more help until they said, hey, can you just run accounting and finance for our company? So he got out of his practice and now he's a CFO. So that's something that could really happen to our listeners.
Yeah. So I think tune into the bonus episodes. We'll get those
all right.
out. Did you want to touch on since we're talking about SuiteWorld and NetSuite, do you want to talk about kind of some of the announcements that were there that week?
Well, a lot of it was app news. What's new in the app. So maybe we save that for a little bit later when we get to app news.
Oh, that makes sense. All right.
I was curious, and I definitely want to get back to you, Sarah, and talk about the politics and what you're doing in South Carolina. Is there anything else, David, that we should add to our agenda for this episode? What's top of mind for you this week?
I don't have any political stuff to lead us into this, so we can. It's good. So now we have a political person here.
Yeah, I guess the only other thing that I have that's kind of political in a way, at least political in our profession, is there was a story. We didn't get to it last week that is just burning on my list. The SEC Advisory Committee, or one of the SEC Advisory Committees, the Investor Advisory Committee, released a set of recommendations for reforming the Financial Accounting Standards Board. And they're basically saying a lot of the stuff that we've been talking about, criticizing the Financial Accounting Standards Board for not keeping up with stuff like intangible assets and just wasting time. That's not their words, those are mine. Wasting time on nitpicky rulemaking around revenue recognition and lease accounting and taking 10 years to do anything about it. And so I want to talk about that. So that's the other thing I've got on my list today. So lots to talk about, as always, and we always have a hard time cramming it into an hour. So I guess let's talk to Sarah. Sarah, welcome back.
Thanks. I've been here the whole time. I didn't go anywhere.
You have. And okay, so let's talk about your political platform, right? Like, why should South Carolina voters vote for Sarah Work CPA?
Well, I have 18 years of experience in public accounting, and as a public accountant, and you guys know this as well, that we're basically the bridge between the public and the government anyway. So, I have a lot of experience dealing with Department of Revenues, not just in South Carolina, but across the country, because our clienteles are from California to Pennsylvania, so we've got everybody in between. And I have the experience of dealing with people. Like, I have the experience of managing an office. I'm a partner in my firm. So it's one of those things that just seems like a natural fit. Like, I wanted to be able to give the people of South Carolina a choice. And I don't like the sticky kind of wedge topics of General Assembly or State Senate, even though I have run for those offices before. Someone had approached me and said, as a CPA, you should really consider running for state treasurer. And I said, yeah, that actually makes a lot of sense. Let's try that. So I did run 4 years ago for state treasurer, and I'm running again now 4 years later, because last time it was a three-way race between myself and the two the big box brands. So this time it's just me and the incumbent. And, I have 18 years of public accounting experience, where the incumbent really only has his experience as treasurer before before he was elected. So, and just, you see there my list of qualifications versus the incumbent. And I'm actually running as a more or less an independent candidate under the Alliance Party, and just trying to let people know that you should not vote based on party but on people. And that's part of what I'm trying to communicate, is that I'm not here to basically push a political agenda. I'm here to work for the people of South Carolina. And there's actually, I shared in our chat feed, I don't know if that's live or not, but there's an article from the New York Times about how state treasurers are weaponizing the office by basically blacklisting companies that are trying to be environmentally proactive, trying to be green. And what that does is it drives out competition for like state bonds, which inevitably increases the price to borrow, which the state loses in that situation. So it doesn't make a whole bunch of sense. And then they're also talking about how they're, pushing state investments, because that's what the state treasurer does, is they basically take funds received by the Department of Revenue for taxes and payroll and all that kind of stuff, and invest them until the state's ready to use them. So they're also investing in companies that are not green friendly, like oil, gas, coal kind of situations, where those might, everyone's seen gas prices recently, right? Those might pay out in the short term, but long term, is that really what we need for the future? Considering we just had Hurricane Ian hit the states twice, went through Florida and then came back around, hit South Carolina and North Carolina. We have wildfires and all kinds of issues, like globally. I think Pakistan is still trying to basically uncover themselves from the water that has flooded like the most of the country over there. So it's an unfortunate situation that I think that a lot of people aren't aware of, and I don't want that to be the future for my children. So I am putting myself out there as a candidate, running for a party that's not of the typical box, with the only agenda is to make sure that my children, the state is ready for my children to leave when the time comes, or whoever's children to leave when the time comes.
This episode of the Cloud Accounting Podcast is sponsored by LiveFlow. One thing we haven't talked about yet is how LiveFlow helps accountants and bookkeepers to use LiveFlow successfully in their firms. For starters, LiveFlow has amazing customer support. They offer instant help 24/7 from real humans via chat, or if you prefer, you can schedule a Zoom meeting, choose to call them, or even email the founders directly. LiveFlow has a library of plug-and-play templates such as consolidated P&L and flash reports to enable and scale across your clients in a snap. They also have dozens of blog posts from other LiveFlow users where they share their best practices, and they even share their Google Sheets, so you can just copy them and start using their best practices in your firm instantly. In my opinion, this is what really sets LiveFlow apart from thousands of other QuickBooks Online apps, this ability to build, share, and scale on each other's work. To learn more about using LiveFlow and how you can save 20% off your first 3 months, head over to cloudaccountingpodcast.promo/LiveFlow. That is cloudaccountingpodcast.promo/LIVEFLOW. So you become treasurer, you win the election. What's your job? Like, what are you doing for the citizens of South Carolina?
Investing. Yeah. So you're basically investing funds for the state of South Carolina between like the collection point and the spending point. So, and because, they can't just, it's a lot of money to just be sitting in a bank account, right? So they do invest monies for long-term projects. And you basically break it down into what they need immediately. So that's like short-term versus long-term investing. And there's also a position that's an elected position that's basically writes the checks. But really the treasurer is like the banker, is like the state's banker.
Yeah, and I guess, where you put that money is political these days, right? Do you invest in ESG type funds? Do you invest in oil and gas? It can make a difference.
Well, it's interesting. The current state treasurer has just recently, I think it's interesting that just recently the state awarded the treasurer's office $500,000 to investigate cryptocurrencies to educate business leaders in the state about cryptocurrency. So next week I'm going to a blockchain conference in Charleston that is basically the MC is our current state treasurer to kind of ask the hard questions, like what about the environmental impacts? For those who mine cryptocurrencies, they're using more electricity than some small countries in a given day. So it's a lot to digest as far as what exactly needs to be done in order to move the state forward, but not in a way that's going to be harmful or hurt constituents in any way. So.
We like to talk a lot on this show about the CPA pipeline problem, the future of our profession. As a CPA, Sarah, do you have any thoughts, ideas as to how we can fix this mismatch between supply and demand of CPAs?
I think it comes down to a lot of understanding the person, and we're so busy with managing clients that we don't really take the time to manage our professionals, like as our staff. And staff is probably the number one asset that most CPA firms, like their number one cost is the asset of the staff that they have. Are you asking the right questions? Are you asking them if they like the work they're doing? Not berating them when they don't get the work that you've asked them to do done, if that's not something they're interested in. So I think we really need to kind of address the issue of the individual and not necessarily the overall. There is also, I went to a CPE where they were saying, y'all are complaining about not having candidates for accountants basically coming out of college. Y'all aren't showing up at colleges and universities telling people how great your job is or why your job is important to you. So I think that we all need to be ambassadors of the profession and encourage those coming up from high school into college, or even just straight out of high school. If someone would like to intern, are we going into high schools and saying, hey, I just need somebody to help me load things to the portal or whatever. It's really, are we doing the diligence and getting out there and expressing why being a CPA or accountant is important to us?
Well, we're just so busy, right? It's
and
hard to make time.
Well, it's funny because my partner, I was telling her that this is what was going on at the CPE, and she said, "You tell that presenter to go to the colleges. I'm over here preparing tax returns." So
yeah, we're all, It's hard for CPAs who are out there serving small businesses. There's so much work to be done to make time to go out and do outreach, right, on behalf of the profession. It's hard to justify that, or hard to find time for that.
Or, even send your associates out. We have 2 associates in the office. I was going to actually ask them to go and do a presentation at their school and see if they could drum up some more interest in folks coming up out of school. So
I feel like part of the problem, and this is just based on my personal experience, part of the problem is that a lot of partners are actively discouraging people from going into the profession. So when I was a bookkeeper and I was taking classes to get my CPA as a career changer, one of the CPAs I worked for actually said, like, don't do it. He told me, don't become a CPA, because he, I think, was, overworked and miserable.
I think that was the case where if you could stay a bookkeeper and not have the vehicle of a CPA behind your name, you would stay with them forever. So I think that a lot of people might discourage their lower staff from moving up because they know that, oh, you're really good at this. I don't want you to go anywhere. But as soon as you get that CPA license, it's an automatic ticket to whatever you want to do.
So it's sort of selfish thinking, right? Keep your staff where they are, but long term that doesn't work.
No, long term it doesn't.
Anyway.
Yeah, exactly. Yeah. If they're not happy, they'll move on. But I think that as a profession, we need to work on the environment in which we are basically educating our staff. We push the numbers, but at the same time, are they really learning anything? Yeah. So, and every kind of chat that we've been a part of, as far as reaching out to everyone else to see what the standard is right now, and they're saying 2 years before associates will start actually producing more than they're taking home. So
right. Well, and that's because our education doesn't really prepare people to do the work that is necessary in most firms.
Yeah.
Right. We have to train them all over again.
Yeah. And it's interesting. I mean, through COVID really threw a wrench in everything with young professionals, I think, in general, just because, they were going to school and learning, and then all of a sudden the teachers had to basically rewrite the syllabus because, they couldn't either. They had to take the time in order to go virtual if they weren't already, and then retool their lessons for people who couldn't be on the virtual. So I think that there's a lot that I know that our associates missed in just the spectrum of change that happened with COVID. So,
and tell me a little bit about your firm. How many partners? How many staff?
We've got 3 partners, and one of them is semi-retired. He's like, I just want to go to part-time during tax season, and then I can go off to like Europe and backpack or whatever. But we have 10 overall individuals that are helping the office. So we've got basically an associate or a bookkeeper for each partner, and then a staff person too for it. So it's and then one more person that comes in as a contractor part-time. So it's like 3, 6, 9, and then 10. So.
And do you yourself have a particular area of focus?
No, basically so we've been trying to narrow our niche, but it's usually, for me, it's just any small business, but I'm not taking on businesses that are just need a tax return or just need bookkeeping or just need payroll. It's like it has to be everything. We're going to do it all, or we're not going to do any of it. But overall, the firm is trying to move towards service providers for like outdoor things, like construction workers, adventure kind of club things. So for example, we had a skydiver come in last week asking for assistance. We've been looking, some people have been looking at ATVs, like doing those like through the desert kind of adventure tours. There's also been like day camps for kids and stuff. So we're looking to move to more of like an outdoor kind of set, but right now we're just really generalists. I mean, we have people, clients who work in the space industry and retailers, everything in between. So it's kind of interesting.
Yeah. Well, that's great.
So I was looking at your website, and you were talking about the things you'll do once you're in office, right? And you have a sentence here, and it kind of ties right back to this conversation. And I'll just read it. Stop turnover in the treasurer's office by encouraging employees to be confident in their positions and provide an environment that allows people to do their jobs and grow in their abilities as professionals. It's basically, it sounds like the Department of Treasury or the Treasurer's Office in South Carolina has the exact same problems as the rest of the accounting industry.
Yes, and I think that is a little bit to do with the current manager. So, but it's hard to, I've had a lot of stories come to me about the management in the treasurer's office, and that's why I put that in there. It's hard to campaign on that kind of a situation when you don't have like the numbers. I've tried contacting like the human resources for the state, and they're like, we don't provide that. And I was like, okay.
There's no Glassdoor reviews, or you can't go to
Exactly.
Glassdoor and read these types of things.
Yeah, exactly. But I mean, I have heard a lot of, of people with stories come to me and say, I'm glad you're running. Let me tell you about this, or let me tell you about that. And I'm just like, okay, well, I'm going to put that in there as one of, because I think I prefer to listen before I, engage in a conversation. As when someone comes into my office, I don't tell them this is what you did wrong, or this is, what we need to work on. I ask them, tell me what you're feeling about what's going on right now in the office. How is life changing for you? Do you need more support from us? What do you need from us? Not, this is what I want from you. So I think that a lot of accountants, a lot of CPs, offices should consider a little bit more about how to maintain what they have and encourage the environment to be more open. So,
well, Sarah, thank you so much for joining us.
Yeah, thanks. Thanks for having me on, guys.
Yeah, thank you so much. Good luck.
Thank you.
This episode of the Cloud Accounting Podcast is sponsored by Zoho. I'm sure you've heard of Zoho before. We've probably even mentioned Zoho CRM or Zoho Books on this podcast in the past. But do you really know about Zoho? Did you know that Zoho has been around for 26 years? Did you know that Zoho has 85 million users? Did you know that Zoho has over 50 applications? Did you know that Zoho offers one subscription to 50 applications? Did you know that Zoho apps are integrated with other Zoho apps? Did you know that almost all Zoho apps have Zapier connections? Did you know that some Zoho apps can connect directly to QuickBooks Online, Xero, and Sage Accounting? Did you know that Zoho offers an entire suite of solutions to run your firm, including a CRM, expense tracking, bookkeeping, a full office suite, a support ticket system, and workflow automation? Did you know that Zoho offers a suite of solutions for your clients' bookkeeping, including bookkeeping, inventory, invoicing, subscription management, and a checkout app? Did you know that Zoho has an accountants program? Did you know that Zoho advisors get free access to 8 Zoho applications and a dedicated account manager? If you want to learn more about becoming a Zoho advisor, head over to cloudaccountingpodcast.promo/Zoho. That is cloudaccountingpodcast.promo/ZOHO. Zoho, a one-stop solution for all business needs.
So David, where do we go from here?
I have PwC is launching a work for credit program for aspiring accountants.
A work for credit program?
Yeah, so it looks like
I saw this.
Yeah, a law was changed in May in the state of New Jersey that allows students that already have 120 credit hours, they can now earn the extra 30 they need for the CPA by actually working at a firm.
Yes, instead of doing a year in a graduate
Another
program.
one more year of school, basically,
Mm-hmm.
Yep. And so they partnered with St. Peter's University, and it's a first-of-a-kind pilot that they're doing. And so basically you are going to work full-time, get paid full-time, but be able to utilize that experience, and it accounts towards your credit hours. And they, a week ago, started this with 6 students.
It's only in New Jersey for New Jersey licensing at the moment.
Correct. And they're expected to contribute between 40 and 50 hours a week. If they're lucky.
If they're lucky, yes.
It's not even like 40. It's 40 to 50. Like they already have 50 listed there, which means it's probably 50 to 60. But
right, exactly. Yeah, and the and PwC will pay the university that's part of this program, St. Peter's University. So I don't know. I mean, it's a step in the right direction. I think that work experience should be counted equally to education. And if we really wanted to solve this problem, we would say that, if you've got 5 years of experience working in public accounting, we don't care at all about your education requirement. You sit for the CPA exam, you pass it, you're a CPA, right? Like, why not? Otherwise, you're just perpetuating this university monopoly that they seem to have on accounting education. We all know.
Even this is a game because they don't, ideally, it would be this. Go work in an accounting firm for a year we'll give you credit for that if you choose to keep going to become an accountant. First, you have to do, basically, you're all in. You're committed to being an accountant if you've already done 120 of the 150. Like this is at the end of your run, essentially.
Oh, well, hey.
What if you start doing that and you realize you don't like it? Now
that's right.
What? Like,
so let's see. Speaking of big firms, I got a few stories about audit failures. Those are always fun. Going concern. A bunch of auditors at RSM effed up. That's the headline on a going concern article. They're covering the SEC's order that charges RSM, 3 senior level employees who work there, and a couple of partners with improper professional conduct for failing to properly audit Revolution Lighting Technologies, Inc.'s financial statements over a 4-year period. Apparently, Revolution was violating accounting principles by inflating revenue with bill and hold sales. David, have you heard of this scheme, bill and hold sales?
I think we talked about it last week with VMware, something similar, right?
It's
when you book the sale because you want to get the revenue to a different quarter to state what you're doing, and it's rev rec games, right?
So and actually VMware was doing the opposite. They were pushing revenue from current quarters into the next quarter to even earnings. In this situation, Revolution was booking revenue but then not shipping until the following quarter. And that's like accelerating it, right? To make their current quarter look better. And basically RSM failed to find this, and they basically failed to figure it out. They should have had something in place. Now, the funny thing is about these SEC orders is that RSM did not admit or deny the SEC's findings, right? They don't have to admit guilt in this, and they're going to pay a $3.75 million penalty. They're going to retain an independent consultant to review and evaluate its audit review and quality control policies and procedures. But like these 2 individuals who were at the center of it, right, of the audit, they are suspended, but they can apply for reinstatement after 3 years and 1 year respectively. So like 3 years, 1 year, and then they can go back to doing what they're doing. So like, I say this a lot, but I feel like the penalty for doing a crappy audit is actually really not that bad, because you can come back and do it again, right?
Yeah, I'm just trying to see. I'm trying to Google here what Revolution Lighting's revenue is.
Well, what would be more interesting to know would be RSM's revenue, right? Because this $3.75 million penalty is, that's what they're going to pay for this, right? But is that material to them?
Well, yeah, I mean, how much are they getting from the lighting company?
Right.
What are they billing? Yeah, so their revenue is $175 million. So how much are you getting if you're auditing them? Is this $1 million a year engagement? Like, was this still a profitable engagement for them, even with the fine? Is I guess what I'm wondering.
Probably not, but then across their whole client base, right? If you only get
really
hit for one, RSM had $3.3 billion in revenue in its most recent fiscal year, right? Yeah. So like a $3.75 million penalty compared to $3.3 billion in revenue, not a big deal, right? So we've got this story about the SEC Advisory Committee that I mentioned. I want to read some of the quotes from here. This is from the Investor Advisor Committee. They've released a set of recommendations for reforming the way FASB operates, and particularly criticizing current accounting standards. Here's the draft recommendations from the committee. In recent years, investors have increasingly voiced concerns that accounting standard setting has not kept pace with the evolution of the sources of value and risk, leaving investors without the information they need to value modern companies. Investors are working with a 19th century manufacturing accounting model in a 21st century service-oriented global intangibles-based economy. Our view is that the accounting model does not provide a suitable framework for the information investors need. And that was from the CFA Institute in a letter from Sandra Peters, and the group pointed to this. So, like, this is what I've been talking about, David, where, I harp on this, that accounting standards were developed during the industrial age for railroads, for manufacturing, and they have not evolved in 100 years to deal with intangible assets in the knowledge economy and businesses that derive value from subscriptions and things that are not just selling widgets.
And not to mention, investors aren't even using them. I mean, most people are investing, and they've never looked at a financial statement for any company ever.
Right. And the reason they're not using them is because the data in the financial statements is just not as useful as it used to be. Maybe it was really useful for GE back in the day, but it's not useful for evaluating Netflix or evaluating Amazon or Google or any of these modern technology companies that are based on subscriptions and digital assets.
And they miss it misses the use cases, right? Like you walk around and like every kid has Netflix open on their device in your house.
Or you have Roblox, right? Metaverse. The metaverse is intangible, right? And like accounting standards don't know how to deal with this stuff. The committee criticized FASB for spending so much of their time focusing on simplification for the people who issue financial statements or the accountants who issue them. So they spend their time and resources fine-tuning narrow standards rather than addressing more pressing accounting issues such as cash flows, intangibles, financial statement preparation, labor cost accounting, segment reporting, and measurement of the financial impacts of climate change and energy transition. For instance, the statement of cash flows hasn't been updated since the 1980s, and they cite the widespread concern about the lack of authoritative guidance for internally developed intangible assets. FASB declined to comment on this. Yeah, it's actually nice to hear that the investor advisor committee is bringing this stuff up. Like maybe something will happen. Maybe FASB won't spend 10 years figuring out how to do lease accounting or even longer with revenue recognition. I mean, that's how long it took. 10 years. And then they issued, hundreds of pages on lease accounting. And I have not met a single person who thinks that any of that stuff is useful at all to investors. It just created a bunch of work for accountants. It's a bunch of rules that offers very little value. And if you're listening and you think it offers value, please tell me, because I can't find anybody who says that any of it has value, which is a waste of time.
Now, they did make a change. I don't know if you saw about for the way companies are declaring their cash flow. Apparently, prior to, or just in general, you used to not really get your financing through the supply chain. I think historically you'd take a loan from a bank, go acquire the things you need, and that's it. But now the supply chains, and it's becoming so massive, like you're getting your financing basically from the person you're buying the goods from, right? And they play games with those numbers. And so apparently as of on Thursday, they finally published rules. And this article is in Bloomberg Law, and they said U.S. accounting rules makers, so I'm assuming it's FASB, right? More than likely.
Yeah.
And they published, so next year companies have to reveal their financial statements in the footnotes of their supply chain financing, and then how much of it at stake at the reporting period. And this goes into effect any reporting after December 15th, 2022. So basically 2023 calendar year reporting companies. So they do make decisions. It says the SEC has been complaining about this since 2020 and called out Coca-Cola, Procter & Gamble, Boeing, and others. But if they've been complaining about this since 2020, it's only 2022, and the decision's been made and the guidance and the recommendation is here. So it kind of contradicts what you were just saying, right? Like, is it just some things are easier? Maybe that's why.
I don't know.
This episode of the Cloud Accounting Podcast is sponsored by Canopy. Did you know that Canopy has a partnership with the IRS? This means that you can now use Canopy to pull your client transcripts. The integration is approved by the IRS and can be configured to automatically pull transcripts. You can easily monitor if and when something changes. Now here's the best part. Once you have your client's transcripts, you can use Canopy's Notices feature to help you resolve your client's notices. Canopy has a library of 350 plus pre-built federal and state notice templates that provide an overview of the notice type, as well as walk you through the recommended steps to resolution. And Canopy can even create and autofill your IRS response letters. Canopy also integrates with QuickBooks Online, Xero, FreshBooks, CRMs, form builders, spreadsheets, calendars, email, and Zapier. They even have a mobile app, centralized file management, fillable PDFs, a client portal, task management, and the list goes on and on. To get a demo of Canopy and to receive a $40 Amazon gift card, head over to cloudaccountingpodcast.promo/Canopy. That is cloudaccountingpodcast.promo/CANOPY.
I got a story about another audit failure. The SEC has charged Friedman with improper professional conduct in audits. So this was audits of two public companies from 2017 to 2020. New York City-based Friedman, which completed a merger with top 25 firm Markham earlier this month, has agreed to settle the charges and will pay $1.5 million in total monetary relief. One of the audits in question is of iFresh Inc. for fiscal years 2017 to 2020. The firm, according to the SEC's order, failed to design and perform audit procedures that would have detected numerous undisclosed related party transactions by iFresh. iFresh is an Asian American grocery supermarket chain. They've been previously charged by the SEC with repeatedly filing materially inaccurate financial statements that failed to fully disclose related party transactions. So I guess this has happened in the past. The allegations are that iFresh engaged in undisclosed transactions with entities that were either controlled by the CEO of the company or owned by the CEO's brother, and the firm did not exercise professional skepticism during its review of the work papers, specifically failing to recognize indications of undisclosed related parties, and they did not design, implement, and monitor an adequate system of quality control, and they failed to adopt and implement adequate policies and procedures regarding audit documentation. And as with the one we just talked about, Friedman did not admit or deny the findings. They are going to be censured, implement training of staff, and pay some fines. And that's that. So apparently you can do a bad audit and you can just pay money and you're okay.
Yeah, and to some extent, these playing games with the numbers. And I remember a year ago, or it feels like even longer, you really got on this kick that there's a risk here of people misstating revenues, playing games with their numbers, and it could cause a big collapse in the economy. Well, people have some data on this now. It's kind of interesting. So I saw an article that said, this was in Bloomberg as well, how creative accounting camouflages weak corporate profits.
Okay.
So obviously right now everything's recession. That's all the talk. But if you look at the S&P 500 companies' earnings reports, there's no indication we're in a recession.
People are saying we're in a recession, but like I just saw a story about how unemployment insurance claims are the lowest they've been since April or May. So you're saying earnings are up?
Gave Call Research's Charles Gave, he started his finance career in 1970, but he compared the S&P 500 earning profits from the broader economy and found that historically the data diverges on the brink of recessions.
Okay.
And so, and basically, since 1960, on every occasion when the S&P 500 earnings climbed 20% above the broader corporate profits, a recession ensued.
Say that again.
So when S&P 500 earnings climbed at least 20% above broader corporate profits, a recession ensued. So the S&P 500 companies are better at playing creative accounting games.
Oh,
right.
Okay.
And so as soon as there's the difference happens in that when they're not aligned with the rest of all the other corporate profits that are happening,
it's an indicator that they are playing games, and that means that a recession is coming. That's what you're saying.
Because they're the only ones having good numbers.
Right.
If that makes any sense.
Ah, interesting. And so is that happening now?
Yes, it's at its spot right now.
So this is strange because we also have this data that shows that unemployment is not really increasing. In fact, the labor market is tight. It's tighter even in areas like we see this in accounting, where broadly in the United States right now, across all industries, there are 2 jobs for every 1 worker. 2 jobs available for every 1 worker. So I find this idea that a recession is going to correct the labor imbalance in accounting to be completely absurd. Because if anything, it's worse than that. There's probably more than 2 jobs for every accountant right now. So like all those partners out there hoping that that's going to solve the problem, it's not going to happen.
Well, when we were in NetSuite, they had 3 apps pitch, and one of the apps was a healthcare virtual. They're trying to use VR technologies and virtual doctor's appointments to help doctors scale and nurses scale because there's not enough. They have a labor crisis in that industry.
Yeah.
So there's probably some industries that it doesn't really matter about the economy. There's going to be bodies needed, and paying taxes and financial reports and accounting. It doesn't matter the state of the economy. You're still the same amount of work exists, right? It's the same thing with healthcare. The economy can get bad, but it doesn't mean people don't need healthcare. So there's going to be some industries where the labor shortage could never be solved by a cutback. I mean, maybe 5-star steakhouses, if they have a labor shortage and the economy gets tight and they all start closing, they don't have a problem anymore. But in general, I don't think the accounting industry is going to be affected. In my experience of observing Intuit all these years, like recessions never slowed things down in our industry.
Well, and here's one more data point sort of on the other side of this that could contradict me and point that like layoffs are coming. Wall Street Journal had a video on their site called "Why Worker Productivity is So Important to the Economy," and it's a great summary of like this measure, productivity measure that we've tracked for decades and decades in our country. Worker productivity has stagnated and even gone down, right, over decades. We haven't really seen a lot of improvement in this ratio. And in 2022, we had the sharpest decline in labor productivity in 74 years. We had negative productivity growth. And productivity is your output, your GDP, divided by your labor hours. So if productivity declines, it means you're making less stuff with the same people, or you've hired more people, and it's that ratio, right?
Yeah.
It's how much stuff are you making versus how much time you're inputting. And so because that's declined, that could indicate that companies are holding on to their workers, but they're not getting much out of them. So maybe at some point, right, they'll start letting them go to increase productivity, right?
All those quiet quitters.
All those quiet quitters, right? Maybe. But then also I'm wondering, maybe this measure that we have, this productivity measure where the denominator we're dividing by hours worked is wrong now. Because I am always talking about, and we're talking about in this profession, about how like the inputs that you do are not as important anymore because of technology, right? Like I can do the work in 1 hour that a traditional bookkeeper could do in a whole day if I set up my accounting systems properly. So is productivity where the inputs are hours, is that even accurate anymore? Like maybe that's the reason that the measure doesn't make sense. I'm not sure. But we've got all this conflicting data, right? We've got productivity declining. We've got unemployment insurance claims declining. And we actually haven't seen in the broader earnings announcements like huge declines, right? The economy's still going fine. We've seen the stock market go down, but the stock market prices are not the economy. And yet you have the Federal Reserve saying, they're gonna keep raising the interest rates until they see some unemployment. But what if the unemployment never comes? Are they just going to keep raising rates? Like maybe they're fighting the battle from the last recession. I don't know.
Yeah.
Maybe we're looking at the wrong thing. Well.
And then based on the NetSuite conference, if you use more of the suite, you grew even faster. that was the message there. It was pretty obvious.
Every
company there is like in hyper growth.
They're all in hyper. Kind of yeah, they're all doing great, right? What was interesting about NetSuite, I think my favorite part of the conference wasn't actually even any of the official interviews we did. It was we went to a happy hour hosted by Bitwave, and we got to meet the team from Reddit. And
it's the internal controller accountants team. It's not. I first, when I met them, I thought they were like in the Reddit subgroup for accountants. I just thought I was like, this is so cool. Like
just like Reddit
work
users.
For Reddit. It took me a while to put that together.
And I was confused too because they work at Reddit, but the title wasn't, controller. It wasn't head of finance. It was product manager. And so then I thought, wait, you're a product manager? Does that mean that you design Reddit? Like I was very confused, but the full title of one of the people I spoke to was product manager finance systems. So there's a team of 4 at Reddit, 4 people, and all they do is manage the systems. So NetSuite, whatever they're using for managing their business, like the CRM, the systems, all that stuff, the IT, the information systems, that's all they do.
It's the app stack.
The app stack,
They're building the app stack.
Yes. Yeah. So think about this. That's 4 years ago when we went to SuiteWorld, or when I went to SuiteWorld, that would be one person. Now there's a team of 4 people managing the app stack, what we call the app stack in the small business world at Reddit. And they're probably saving Reddit 40 people because they've got all the data flowing automatically.
And what I love about their titles, there's no doubt at any company, especially startups, anywhere you go, the product manager job band, that title, is probably getting 40% more pay than the
IT
controller.
Or IT.
Yeah, right?
Yeah.
So
and this
if
is important.
If you're doing this kind of work, you should try to lobby that you could argue, the product manager is doing this for the product at our company. I'm doing the same thing for our internal accounting product, our tech stack. I want to be paid the same. You change your title to product manager. Stop calling yourself controller or sysadmin, all these things.
So I asked this question. I said, so do you do any financial close? Do you do any accounting? And they said, no. Our job is just to support that team by making sure that NetSuite is doing its job.
They're building the systems.
Yeah. Automating as much as possible. And it makes sense because the financial close is getting shorter and shorter and shorter. Businesses want to know the results right after month close and even on a weekly basis. And so you got to automate. You got to have real-time data flowing. And I know I was really excited because like if I was going to go back and into our space and you know, not just be a podcaster.
Start again, like start your accounting career over.
Be a real accountant. I would want that job. I would want to go work at Reddit in finance systems and be a product manager because that just sounds so cool. And of course, then we got to talk to them all about the accounting subreddit.
Yeah,
because
we
they are
jump into app news, but I think we're gonna have to cut out like we are not gonna get to the Intuit's Investor Day slide deck. It can't happen. So
really?
We're gonna have to do that next week.
No,
it's 157 slides. It is actually everybody should go look at it in between, and then we can all kind of half discuss it together next time we all come together to do the podcast. I've never seen so much shared in a deck before. Like essentially Intuit's like, here's everything we're going to do. Here's how we're doing it. There's no point of NDAs anymore. They've just shared everything. Here's all the numbers. Here's the numbers of this. Here's what we're doing moving forward. And I think the summary of it is they look at the TAM, the total addressable market. It's so gigantic. Intuit's viewing themselves as like, we don't own any market share yet. Like we don't really like we're not a. Here's our plan because nobody can go and steal it. Like it's wide open, right? They're like, here's our plan, and here's our goal, and here's how we're going to execute and get this. Try to stop us is kind of the view of the deck. So we won't go into that past that, but let's jump into app news. You want to play the music?
Okay, app news. Here we go. So we're going to talk about NetSuite's announcements.
Yeah.
All right, let's just go down the list, David. NetSuite AP automation. NetSuite announced last year that they are partnering with HSBC, the bank, to process bills and pay vendors, and they've rolled that out with AP automation. But it's a lot more than that, right? It's not just paying bills from directly within NetSuite. You can actually add your bills in like a Dext or an auto entry or a hub doc. You can drag and drop bills, or you can have vendors email in their bills, and they go into NetSuite, and there's OCR that happens, and you can tag
and
the
three-way matches back to your purchase orders and other parts of the suite, and then pulls through all the way through to the bill payment and getting the bill payment approved.
And if you sign up for the HSBC bill payment, you can actually pay your bills from directly inside of NetSuite, a la Bill.com kind of functionality. And it works with your existing bank account too. HSBC will provide the payment rails, and you just hook it up to your bank account. So that's pretty slick.
And it's all in the suite. You don't have to leave. And arguably, the natural home to pay bills is in the accounting software, right? You don't have to leave to go pay your bills. You're already here. Just pay them in the accounting software. So it really makes a lot of sense.
Yep. And HSBC is doing ACH, check, or virtual card. And the virtual card thing's kind of cool. So if you have a customer or a vendor that likes to take credit card numbers, and that's the easiest way to pay them because getting their ACH information is difficult, you can send them a one-time use credit card number. They can use that number to charge you for that specific amount that you've authorized. And then they
what's
paid.
Attractive about that, if you're a big enough company on the other side, if they're sending you a virtual credit card number, guess what you can do on your side? Virtually process everything and automate the whole process on your side when you're getting paid, right? And so that's the beauty for bigger businesses. If you have high volume, that's the best way to go. You can eat the fee. You can eat the 2% credit card fee, the processing fee, if you're automating a process, and you don't have to have a body, right?
Yeah.
Doing this work for you.
So then I'm just going to go down the list, David, and I'll let you introduce this one. So the next one was NetSuite CPQ. That stands for Configure, Price, Quote.
And essentially what they've done is, because it's all in the suite, because what happens right now is you have, a salesperson on Salesforce, they're telling the customer, sure, we got the parts, we can sell you this. And then the people that go to pick the parts to ship it Like they can't do it because the parts don't exist, but because the suite has everything in it, they've tied this all together so you can quote your customer, configure it. Like they have an example where it's a desk. Pick all the components of the desk. If they're not available, you can't quote that to the customer. It's all tied into the full inventory. It gets configured. It also ties into any of maybe special pricing you have. There's 3 or 4 promotions. Those will get pulled in automatically, and then it pulls all the way through the next feature, really, which is essentially their Ship Central. I don't know if you want to talk about that.
Yeah. So Ship Central optimizes fulfillment and eliminates manual processes for warehouse workers. It's a lot of workflow around how do we optimize shipping, especially when somebody's ordering multiple products. That's the feel I got. So use fewer boxes. A lot of shipping solutions will just put out a shipment for each item. Previously, right? Like in NetSuite, you would just pack a box with one item, put a label on it. Pack a box in another item, put a label on it. And now you can actually efficiently do this. And to me, it made me think of the way Amazon optimizes their shipping, where they'll pick the perfect size box based on the items, and then the workers just put everything in and it all fits.
And the other big thing was their part of their People Suite or Suite People, workforce management. So they acquired a company called, I think it's called Addy. And basically what it is if I'm a restaurant, my employees I can schedule my employees. They have an app. They can clock in and out from the app. They can swap shifts. I mean, it's an app that probably people have seen their own clients on, right? A lot of timesheet apps they've added on.
It reminded me of every point of sale system in a restaurant or a store that has the clock in, clock out functionality, right? That has the scheduling functionality that lets workers swap shifts. It's pretty sophisticated.
Yeah, and then they layered in knowledge about overtime rules and all the places people do business, and that automatically flows obviously the payroll into the financials. I think my big 2 takeaways from like what they've announced: A, they tie every feature back to the financials.
Right. So they always show how, because this is something that the other add-on solutions can't do, they show how as you change and update your schedule for the week, you see your labor cost. And not just the dollar amount of your labor cost based on the hours, but also like the percentage of your labor cost according to your budgeted amount. So if you want your labor cost in your restaurant to always be 28% of sales, you can reach that target. And it's not just you as the finance person, the actual manager who's making the schedule will see that number go up and down. And then they can target that number. Yeah. And that is really powerful. And it's the sort of thing you can only do when you have a suite approach.
And the other thing that the bell went off for me when they started going through these features, well, actually 2 bells. One is it would be the perfect product to have a chat. We've been talking about this. Why don't GLs have chats, right? They should be built in. There should be a chatting between the teams. And with NetSuite, it makes a lot of sense because you put all your employees into NetSuite. It would make sense for it to have a chat-like functionality like Teams or Slack or something. But the other part that really went off for me is when I'm seeing these features come out, in many cases, we've been seeing this like for a decade. Right?
Yeah.
Through apps and the tech stack that adds onto a QuickBooks or a Xero. And my assumption is if you had a restaurant and a point of sale, you probably even use 3 or 4 of these apps to run your restaurant. And I'm like, it feels like NetSuite's late to the party, but I'm also thinking these apps come and they go out of business, they raise the prices, it's this dance and this game where I could see people that attend this conference and CFOs and IT leaders are the people that are at
SuiteWorld.
No, Reddit, right?
Oh,
I see them sitting back and being like, you know what? What's built in is good enough.
Yeah.
We're just going to roll with that. It's rolled up into our bill. And not only that, it's good enough. It actually might be better because it ties all the way back to everything else we do in NetSuite. Yeah. So I kind of can see where people, as they add these things to the suite, people are like, oh, great. That's one less like third-party solution I need to use.
Yeah.
I'm just going to use this one because it's good enough.
I think you're right, David. And it's specifically targeted. I think these products are targeted toward people who are on a QuickBooks and they have all these add-ons connecting into it, and they know that they need to switch to an ERP system. And the more that they can take that they're doing separately and package into one, like the reduction in the number of apps is a selling point, because it means that I can hire a NetSuite person who knows NetSuite, and I know that they will be able to figure out how to do all this stuff. And they don't have to go out and learn something they don't know. And so becoming a NetSuite expert, like we talked to the Reddit folks, right? Like a lot of them, the 2 of them at least, have been doing NetSuite for years and years and just moving into different companies, helping them optimize this whole thing. So to me, it's sort of like the the benefit of being a QuickBooks Pro Advisor, for instance, right? And just knowing every bit of the app. It's the same thing, but for this ERP system, it's just so much more vast. So the opportunity is so much greater. If you're an accounting student and you love technology, I mean, that's probably one of the reasons you're listening to this show. Go learn this app. Go learn the suite.
Especially if you
NetSuite.
think you're going to go private.
Yeah, if you want to go private and you don't want to sweat it out in public accounting, I mean, but you can also do it in public. Like you can be a consultant.
Yes,
so one of the Redditors was at Deloitte in NetSuite implementations and consulting, and then moved over to industry. So you can do the same thing in industry and in public. It's just so much opportunity because every business needs
asked
this.
Evan Goldberg, the founder and executive vice president, about these pendulum swing of bundling and unbundling of apps and app stacks and choice. And he pretty much said there's not one customer that's ever said, I really wish I had more separate products.
Yeah.
Well, now, yes,
and
he's only asking that to people paying for NetSuite already, but it's probably true.
I think it's a false dichotomy, if that's the right word, where I'm so sick of hearing it. Best of breed versus all-in-one. It's not either or. And I didn't meet any NetSuite user who was using the whole suite.
Yep.
It's, I want a solution where all of my data can live. And if the processes, if the things I can do in NetSuite are good enough, I'll use it. And if I need to use an add-on, I will use it. But my data will still live in NetSuite.
And they had 130 add-ons there when you walked at the expo hall. So there's still add-ons. It's the data moves in and out.
I want
and
the
what's
option.
interesting about their add-ons appear inside of NetSuite as a tab.
Right.
It's not, you're not leaving to a different browser to play with those.
And they have to do it that way because when they build an add-on in their own suite, they tend to do it via acquisition. So they add it in as a tab in their app. It just becomes NetSuite branded, right? Oracle branded. So I mean, it was pretty good set of new features. Now it's funny because, these features apply to different industries. And so of the 6,000 people there, there wasn't just like this amazing, applause for any of them, because for a manufacturer, well, if you're not a manufacturer, like you don't really care and you don't ship things, you don't really care about the shipping features, right? So it was sort of like a little bit for everybody, but it was a lot.
Great. Did you, if BlackLine, was that something that's kind of similar to a Flowcast type product?
Yeah, they were our, evil empire that we fought against as a startup at Flowcast.
Well, they introduced a new buzzword this week called hyperautomation.
Hyperautomation.
They unveiled hyperautomation capabilities for taxes. I don't know. It just looks like it's actually something similar to that NetSuite announced. So NetSuite's supporting Brazil.
Mm-hmm.
And basically, when you're working in Brazil, if you create an invoice, it has to go to the government first and get some special barcode, come back to you before you can send it off to and then it's almost like a completed tax return, but it's really the invoice is under some certain format and you hand that to the client, then the client pays you. And it's all barcoded and coded up this way. So it looks like they're doing some things like that, generating invoices across jurisdictions to ensure compliance, audit. So they're doing that. They're doing some tax specific treatments, but I don't understand this hyperautomation. They said hyperautomation from just automation by saying it is more about the holistic mapping and orchestrated use of tax-critical automation capabilities to break down financial silos and intercompany processes.
That sounds like some marketing gobbledygook to me.
Yeah, I thought that was kind of funny.
It's all about reducing the number of people having to touch this stuff, right? Because, again, we've got more than 2 accounting jobs for every accounting professional. So, David, we are running out of time. I've got a listener voicemail that I want to play. Is there anything else?
I think there's just 2 small people getting into bookkeeping. So LPL Financials, which essentially I think a lot of insurance agents, brokers, investor, personal finance type investors, and not coaches is the right word, but people that help manage the finances, right, on the personal side. Well, the company that helps manage that, they kind of have their own proprietary software for working with your clients and their assets and all that. They are now launching a dedicated bookkeeping service for the advisors that use their service. So they're getting into the bookkeeping game on that front. And then our favorite, my favorite bank, PNC, who I used to be at and no longer at, they just purchased a point of sale. So they bought a point of sale called Linga, Linga, to expand upon their payment solutions in the small business offering they're offering clients. So that's like the next step, right? Now we got a point of sale, and we have a bank account. Like, people are on this march to be bookkeepers. Everybody is. Everybody's going to be a bookkeeper in the future.
Well, everybody's going to be automating bookkeeping for the client, whether or not they're using technology or they're using people, or it's a mix of tech and people behind the scenes. There just aren't enough bookkeepers. So that's going to be a big opportunity. And I've got a story on that. I got to save it for next week. Let's get to Geraldine Carter's voicemail.
Hi, David. Hi, Blake. This is Geraldine Carter over here at the Business Strategy for CPAs podcast. I've been following your conversation both in the Broken Supply Chain podcast episode as well as on LinkedIn. And I wanted to add a piece that I think is perhaps inadequately addressed. And that is not just that the supply chain is broken, but that fundamentally the business model is broken. And the three pieces that I see most commonly needing to be addressed for accountants who own businesses or are in firms are that they still have vestige hourly billing, pricing, and thinking. Their prices are suppressed by sometimes a factor of 3. And those prices need to get up. But the prices can't go up because the accountant still is simply doing accounting rather than figuring out how to apply accounting to create value and profit and wealth for their clients. And that comes when the CPA or the accountant can focus on who they want to work with and decide what problem they want to solve for those people. I'm talking more specifically about deepening your expertise and picking a niche to burrow into. And when I work with clients who make these changes, their profit margins come around really quickly. They don't have to work nearly as hard. Their hours come down and they enjoy their work a lot more. And from the outside looking in, if there are a lot of accountants who make these fundamental changes to their business model so that it's a profession where you can make a great living and also have a life outside of accounting, then perhaps it may become more attractive to more people, because right now it just isn't very attractive for most of us from the outside looking in as something to pursue.
Yep.
I'm glad you guys brought this up. I'm glad you're surfacing this. I think it's an important topic. Keep up the great work. I love your podcast.
Thank you so much, Geraldine. I feel like a lot of the problem with accountants being underpaid, especially at the starting salary level, has to do with pricing. It's that partners, directors, managers who are bringing in clients are underpricing based on the value that's being delivered. And so who gets paid the least when that happens? It's the staff, right? Because the partners got to make their money. And so whatever's left goes to staff. And when you underprice, that's who gets hurt the most. So yeah, if we want to solve the problem, we got to get out of this hourly billing mindset that we only get paid for these inputs. It just doesn't make sense anymore, especially when the inputs, the hours you work, are so not connected anymore to the value you can create with technology.
Yeah.
Like I said, you can't bill hourly for bookkeeping work anymore because of the technology. You'd cut your own fees by 80%. You can't bill hourly for tax or audit. I don't think you can do that for any of it anymore, thanks to technology. Otherwise, your rates just look ridiculous, and that hurts you even further. You know, there was a tweet that I saw from Brian Davis, CPA, and he said, so tax Twitter, I've seen a few posts like this, so just for giggles, how much would you charge for a 1040 with 24 1099s, interest and dividends, 27 K1s from partnerships, some of which have PFICs, and 8 vacation rental properties that require bookkeeping, cleanup, and QBO? And there were answers like all over the board. People saying like, that's a full-time job. And some people saying I'd charge $25,000. Some people saying I'd charge $5,000, like just all over the place, not even close. And I said, well, for me to calculate the price I would charge for that person, I would need to know their income. Because from the client's perspective, they don't know how much work this is going to be. You don't even know how much work this is going to be. It's such a big job. But they will look at your fee in context of how much money do they make and how much is this as a percentage of their annual income.
Yeah, they probably think of it that way. Like, okay, this makes sense. Okay, 2%. I need to spend on accountants or something. They have some number in their head, and you're right. And if you look at the work, you're probably not going to match the number that's in their head.
Right. That's how business owners think. They think in terms of percent. So is this a point? Is this 2 points? Right?
Well,
how many basis
somebody
points?
has this kind of a mess. I mean, when I say mess, it's not mess, but it's just complicated.
Just a lot.
Right?
It's complicated. Yeah.
There's a lot to do. Chances are you probably can upsell them to other things. They probably need other services because there's a lot going on in their life. And this goes back to that needing a mother thing, right?
Yeah. And find out what do they pay for their attorneys, right? How much are they paying their attorneys every year? What's their budget for that? So stop focusing on how many forms they have. Like when I see accountants
charging for the return, right?
Yeah.
It should be like, whoa, this customer is pretty complex, came in and their income is this. How do I have a relationship with them? Not just
you're charging for the
return.
planning, the relationship, the meetings, right? Just like being on call, all that stuff. So, 100% Geraldine. Thanks so much for calling in or leaving that voicemail.
I got 2 one-sentence reviews, which are beautiful. I can knock out and then we'll let everybody go.
Sounds good.
All right. So both these reviews are 5 stars. They're both on Apple Podcast. This first one is from Stel604 in Canada. I love, actually the title of it is Love This Podcast. I love listening to this podcast to get my weekly news and commentary. Thank you for putting on a great podcast. I look forward to each episode, ! And the other one is from Sean in Texas. It's 5 stars. Want to be a 21st century accountant? If so, you must subscribe. I haven't found anything even close for staying up to date on relevant technology and news. So thank you to Stel and Sean.
Thank you so much. We really appreciate those reviews. They help us get into people's feeds. If you want to leave a review, do that on Apple Podcasts or on Chartable. And if you want to send us a voicemail, you can do that. Send an email with your voicemail to cloudaccountingpodcast@earmarkcpe.com. That's cloudaccountingpodcast@earmarkcpe.com. Oh, and by the way, you can earn CPE credit for listening to this episode. Just download the free Earmark CPE app in the App Store, sign up, go find the Cloud Accounting Podcast channel. You'll see the course for this episode on the app a week after we drop this episode. Take a quiz. It's a 5-question quiz. Get your CPE certificate. It's never been so easy to earn CPE.
And if you donate to Sarah, take a screenshot of your receipt or a screenshot of the thank you page, tweet it out, tag us, tag Sarah, and we'll retweet it and help amplify that message a little bit.
David, great talking to you as always. I'll see you here next week.
Bye, everybody. Time for the classifieds.
Hey, podcast listeners, it's Blake, and I wanted to let you know about a new show I'm working on with CPA/comedian Greg Kite and blogger/former CPA Caleb Newquist. It's called Oh My Fraud, and it's a podcast all about financial crimes. That's right, a true crime podcast for accountants by accountants. Caleb and Greg are going to come together every couple weeks to unpack their favorite frauds and explore the circumstances, psychology, and interpersonal dynamics involved. They also fully indulge in victim blaming the defrauded widows, orphans, infirm, and feeble-minded because who can resist? If you fancy yourself a trusted advisor or prefer your true crime with spreadsheets instead of corpses, listen to this show to learn what to watch out for and to keep your clients, your firm, and even yourself safe. To subscribe, go to ohmyfraud.com or search Oh My Fraud on Apple Podcasts, Spotify, or wherever you get your podcasts.
Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.